Good morning, Mr. Kong. Here we will present our company financial analysis. Our chosen company is British American Tobacco Malaysia Company, also known as BAT Malaysia. Here our group member are David Kamal, Dong Fang Yu, Henry William, and Nicholas Chai. British American Tobacco, also known as BAT, formed from Palmer, Malaysia, and Malaysian Tobacco Company on 3rd of November 1999. The merger pooled talent, experience, and unrivaled portfolio of highly successful international brands to create the country's largest tobacco company. BAT manufactures and markets high-quality tobacco products designed to meet diverse consumer preferences. British American Tobacco Malaysia aim to maintain their leadership in the industry through increasing our share of the tobacco business and satisfying consumer demand better and more profitably than our competitors. Now we will explain about the core business of BAT. BAT consumers are adult smokers and drive everything they do. Their goal is to satisfy consumers' demand better and more profitably than their competitors. They continue to build a focused, segmented, and differentiated brand portfolio and allocate resources to a full range of brands deployed in the key industry areas that offer the most robust source of volume and profit growth. BAT portfolio includes well-established international names such as Dunhill, Ken, and Pall Mall.
Okay, so now I'm gonna present about the ratio analysis. The first one is the current ratio is under liquidity ratios. Can be seen at 2011 is British American Tobacco got 0.21 times for the current ratio, and the 2012 the current ratio going down to 0.10 times. So meaning British American Tobacco has only uh, 0.25 times of current assets to fulfill the requirements of its current liabilities in year 2011. The current ratio drops even further down to 0.10 times, making it financially weaker in the short run. The drop in current assets in year 2012 is due to high possibility by using its deposits, cash and banks balances to settle its 400 million ringgit of interest-bearing borrowings. So is it not really good for the British American Tobacco because the current ratio has going down. Going down. Second ratio from the liquidity ratios, which is a quick ratio. In the 2011, quick ratio and got 0.21 times, and the 2012 the quick ratio going drop again 0.10 times. Both years between 2011 and year 2012 showed the same values as the current ratio in the years respectively. So this is due to BAT doesn't have any inventory in the both of the years. Okay, now continue to the activity ratios. The first one of the activity ratios is about inventory turnover in 2011 until and 2012. So can be seen that British American Tobacco has 0 times of inventory turnover in both year 2011 and 2012. It's because it does not hold any inventory in its business. Okay, moving on to the average age of inventory. As the value of our inventory turnover for both year 2011 and 2012 is 0, is because when 365 days divided by 0 is undefined in mathematical perspective, so we cannot find the amount. Okay, so the third one is average collection period. In the 2011, 2.89 days, the British American Tobacco can collect their account receivables, which is a good period in year 2011. However, the collection period increased to 18 days, which is in the 2012 is 15 days longer compared to the 2011. Increment in the collection period is most probably due to high amount and increased amount of account receivables. Okay, now continue to the average payment period. So the amount of this ratio also undefined, which is 0. Same exactly happen from average age of inventory. So it's because the value for average payment period is undefined to 0 purchases in the equation. Meaning in the 2011 and 2012, British American Tobacco doesn't have any purchases in both years. So meaning any amount divided by 0 of course is undefined.
Now I will explain about the ratio analysis under activity ratio. And the fifth point is total asset turnover. The first is for every 1 ringgit worth of assets utilized, British American Tobacco generated 0.63 times in the year 2011. The second is for every 1 ringgit worth of assets utilized, British American Tobacco generated 0.68 times in the year 2012, which is higher compared to 2011. While the turnover is not very high, there is increase and improvement for 2011 to 2012. Now under debt ratio, the first one is a debt ratio, and the first point is a British American Tobacco debt ratio is a quite high at 76% in 2011. This means that 70% of its assets were being financed by debts. British American Tobacco debt ratio dropped slightly to 74% in 2012, but it's still quite high. 74% of its assets were being financed by debts. British American Tobacco faced high risk financially as 3/4 of its assets were financed by debts. And next is profitability ratios. The first one is a gross profit margin, and the first factor is British American Tobacco enjoyed 100% gross profit margin in both year 2011 and 2012. And the second one is this is because British American Tobacco have zero cost of goods sold. And the third one is every 1 ringgit British American Tobacco able to generate 1 ringgit to gross profit. And now under profitability ratios, the second point is operating profit margin. And the first factor is British American Tobacco have high operating profit margin of 99% in the year 2011. The second one is British American Tobacco have high operating profit margin of 98% in year 2012. It dropped slightly by 1% as compared to year 2011. And the third one is these high values are good for the company as every 1 ringgit generated 0.99% in the 2011 and 0.98% in the 2012. And now under profitability ratio, the third point is a net profit margin. The first is British American Tobacco have high net profit of 96% in 2011. And the second point is British American Tobacco have high net profit of 94% in the year 2012, but it dropped 2% as compared to 2011. And the third point is this high value is good for the company and potential investors as every 1 ringgit able to generate 0.696 ringgit in 2011 and 0.94 ringgit in 2012.
The earning per share of the company in 2011 is 2.71 ringgit. In 2012 is 2.56 ringgit. The return on total assets of the company in 2011 is 61%. In 2012 is 64%. The return on equity of the company in 2011 is 542%. In 2012 is 513%. The price earning ratio of the company in 2011 is 18.43. In 2012 is 24.2 to 1. And the market ratio of the company in 2011 is 99.88. In 2012 is 124. For our conclusion, according to our analysis of the ratio above, our group is willing to invest 1 million ringgit into British American Tobacco Malaysia. Our first reason is BAT is the most expensive stock in KIC for many years, and the second reason is BAT have 60% market share of the domestic level, so this means that the company is strong in its business. And the third reason is their core product of BAT is a secret, so for the smokers, the demand for the product will always be there. And that's all for our presentation. Thanks for your attention.